Welcome back, everybody. You got Will and I Man here from the Block Runner, and today we're going to be talking about one of the most interesting subjects in cryptocurrency, Bitcoin.
Yes, let's go Bitcoin, dude.
so
I'm
we,
not as enthused as you, as if you guys probably know. It's just I don't know, dude. I
I can't believe you're not as enthused as I am, dude. I can't
I,
believe it.
I know you get like super erect and stuff when we talk about Bitcoin, dude, but not me, dude. I don't know why. I get it. Like I understand the implications of Bitcoin. They're fucking huge. I mean, we talk
Yeah,
about that side of it all the time, right? We talk
yeah,
about the implications of all these models we're about to go through if they turn out to actually be accurate and like they can predict the foreseeable future,
yeah,
then the implications is a worthy discussion,
yeah, absolutely. So
But
we
like as far as like the mathematical models and stuff leading up to these implications,
that's the
like
most interesting part, I man.
I don't know, man, it's different audiences, you know what I mean?
Yeah, I guess.
But
So
let's break it down because it is interesting. Like,
yeah, yeah. So we're gonna be talking about Plan B. So if you're not already following this guy, you need to follow him. He's a genius, and I'm gonna explain why he's a genius. And so just to touch base on the price of Bitcoin right now, if you look at the blue box that we made a couple of days ago or yesterday, wherever it was, we're still on track. It's been hitting 60K and rejecting. So I'm expecting it to explode. And I mean, I got math to prove it. So let's jump into it. So we don't need to talk about Willy Woo charts, but let's talk about this stock to flow cross chain model. And give me a second here.
cross chain or cross asset?
Sorry, cross asset. Man,
Yeah, dude.
man, there's so
I
many of
know
these.
it's habit at this point, dude. We've been through so many cross chain,
Yeah.
like been pounded into our brains.
All
But
right,
this is
so
cross asset.
yeah. So Bitcoin stock to flow cross asset model. So first thing is, what is stock to flow? And it's easy to kind of understand. It's the stock to flow of an asset. So how many is in stock to how many will be entered into the stock, right? So it's the flow of stock, right? So we have this new model called Bitcoin stock to flow cross asset model, which introduces new assets and compares the assets with Bitcoin, and it gives us a projection of where Bitcoin is going to be in any stretch amount of time, right? Because we know the dynamics of Bitcoin, the halvening, and what that means. So, so the first thing that we'll explain from this article, which I definitely recommend you to read, it's a little thick on the math, but that's why we're here. So definitely read this article after watching this video. But I'm going to break down like what the parts are important. So we have
Mhm.
phase transitions. And so he gives us an analogy. It's like water goes through phases, right? It goes from solid to liquid gas, and then there's an ionized phase in water. And when you ask for water, you don't ask for a vapor, right? You don't ask for a solid, right? You're not asking for ionized water either. When you ask for water, you ask for a specific phase, right? And it goes on to say that there's phases in the dollar, right? We first went from exchanging gold for value to money that's backed by gold, and now we have money that's backed by nothing, right? So that's the different phases. So it turns out Bitcoin goes through different phases as well. So the phases of Bitcoin can be considered as the proof of concept model, and we have different phases that we can identify here, right? Here's like a little bit scattered, a little bit less scattered, even less scattered, and the least scattered, right? So you can see that there's 4 different phases on this chart. So then he identifies the phases as proof of concept, right? This is the first yellow dot here. The payments phase. Remember when we were all talking about how Bitcoin can be used to buy coffee, and then all of a sudden buying coffee takes 30 minutes. It's like, this is not a good payment system. This sucks, right? And then so now it's like, oh, Bitcoin's more closer to, it's a better version of gold. And that's the narrative. And so we're seeing the different transitions of phases for Bitcoin. And then at this point now we're at the financial assets. Like, oh, this could be used to transfer $100 million and only cost me $3, right? Maybe that's the point of Bitcoin. So
Mhm.
now we're in that phase. So just like we have phases with like water and the actual dollar, Bitcoin also goes through these phases.
So did he just use this water analogy just to kind of really like illustrate this phasing concept, because obviously there's no correlation between
Oh, for
financial
sure.
assets and like the elemental nature or like the
Sure.
physics of elements, you know.
Yeah, sure, sure, sure. No, I mean, ultimately, like if you look at Bitcoin and you see how if the halving continues, and it will continue till 2140,
Hmm.
the effect of the halving gets smaller and smaller every 4 years. So
Hmm.
when you're at the point where you're like halving from 0.001 to 0.0005, like the effect of that halving has no bearing on the actual price of Bitcoin. So these phases start consolidating into a closer and closer like cluster of dots.
Yeah.
So close that you only have a single dot and the valuation of Bitcoin barely changes, right? The market cap.
Hmm.
So so now that we have like the understanding of the phases, they're like, okay, Bitcoin right now is so valuable. We need to give a projection. We need to figure out how we can project what the market cap of Bitcoin is going to be. And there's only a few things that are more valuable than Bitcoin, right? In terms of assets, right? We have markets that are bigger than Bitcoin, right?
Hmm.
But as far as assets, we have silver and gold. Those are more valuable than Bitcoin at the moment.
Yeah.
So now we start fitting silver and gold into this cluster, right? And we're saying silver, which is this silver dot, right? And then the yellow dot is gold. So
Hmm.
now he says, okay, now that I enter these new assets into this projection, I'm going to call this a stock to flow cross asset model. So that's the origin of that name.
Hmm.
So stock to flow, going
So
back to,
because let me just because he added in the silver and gold point here on this chart, and because they fit so perfectly to this line that he already generated based
yeah,
off of the four previous cycles, right? That was the justification he needed to kind of like use this line to extract whatever data points he needed to create this grand formula that we haven't really seen yet.
yes,
Right?
yes,
As
that's
soon as we
correct.
get there, that was my biggest like gripe with this whole post. I didn't really understand like, okay, there's some variables in this formula. Where do they come from?
Yeah.
He breaks it all down right here.
Yeah, and so let's just talk about the stock to flow ratios of silver and gold.
Mm-hmm.
So I think in the previous article, so there's actually two articles that I do recommend you read. The first one is just stock to flow, and then the second one is stock to flow cross asset. And so there's a chart here that shows you how this stock to flow is used to evaluate gold, silver, palladium, and platinum.
Mm-hmm.
So, for example, gold has 185,000 tones in stock, right? There's 185,000 tones existing on Earth in some bank vault somewhere. And the process to excavate them is predicted to be at 3,000 tones per year. So here's the flow, here's the stock, and if you divide 185 divided by 3, you get a stock to flow ratio of 62. So now you do the same math for silver, palladium, and platinum, and you get 22, 1.1, and 0.4. So the higher the stock to flow, the more valuable the asset is, because the bigger the stock, the smaller the flow gives you a bigger number here.
Yeah, it's just very difficult to acquire essentially
Right,
at that
right. Yeah, so yeah, exactly. So the bigger the number, the more difficult to acquire. So now if we go to the amount of Bitcoin in existence right now, it's roughly 19 million. It's a little bit less than that, but it's roughly 19 million. If you divide 19 million by,
like right now
okay,
it's
here it is. So yeah, and the halving number. So in this article, which was written in 2019, yeah,
mhm.
2019, it gives us a rough estimation of how many Bitcoins are generated per year. So in the current stock of Bitcoin in 2019 was 17 and a half million Bitcoins. And then the rate of new mined Bitcoin was around 700,000 per year,
Mhm.
right? So that gives us a stock to flow 25. So now that Bitcoin is roughly in circulate or roughly in existence is 19 million, if you divide 19 million divided by, which now it's been halved, right? We just went through a 2020 halving.
Mhm.
So now it's not 700,000 introduced or mined into Bitcoin. It's now 350,000. So
And that's every year for the 4 years following
correct.
2020, right? So that
That's
does
correct.
not vary. It's predictable.
It's predictable, right? So
Yeah.
if you make that division, now the stock to flow is 56, right?
Mhm.
So you guys can check the math on that. So it's 56. And if you
Yeah.
compare 56 with the chart above, sorry, I keep jumping around here. 56 is extremely close to gold, right? So now Bitcoin or gold is worth like 12 trillion plus or minus. And so now that it's 56, the market cap of Bitcoin can start getting closer to the market cap of gold.
Yeah, or at least the narrative can start cooking up that, Bitcoin is now officially this on the same bracket of scarcity and difficulty, as far as like assets on earth. you
Yeah,
know we know it's a finite supply of an asset, just like we know gold is too, right? Like at some point it's going to all be gone, at least from this planet, right?
yeah,
So if all these factors persist for these two asset classes, it's going to allow people to understand that narrative even more.
for
Especially
sure.
institutional level money. The small institutions that are kind of like still battling this narrative today. As soon as that six, would you say 56 number
Yeah.
hits? It should start clicking, or it already did hit.
Yeah, I already
Yeah,
did hit
we're
it.
already at
Yeah,
56.
it's been a year since 56 is the number.
Oh shit! So that's okay. Institutions are here.
Yeah,
They're getting,
exactly.
yeah,
Exactly.
yeah. So they're
So
starting to understand.
everything that's been happening is entirely predictable, right? Institutions will not go into an asset that's like $100 billion. That's nothing to them, right? But they will go in when asset is like $1 trillion to $10 trillion. That's gold, right?
Yeah,
So
that's
if you
you're
do the
getting.
math, and the stock to flow ratio is 56, you will get a valuation, a market cap of Bitcoin at $5.5 trillion, right? So the question is, if you're like really doing the math, is like, where the hell did 12.75 come from, and where the hell did 4.11 come from?
Yeah, yeah. We spent like an hour trying to figure that out
Yeah,
before we started recording, because that was. I'm like, dude, we can't just like ignore that. It's
yeah,
like trust the math, bros.
yeah.
There is a process.
Yeah, so just like we were able to fit silver and gold into this model, right? The cross asset model, you
Yeah.
can get those numbers by this straight line that if you read this article, it says with a perfect fit of 99.7%.
Mm-hmm.
So because this line, we can project the value of Bitcoin as the stock to flow increases.
Mm-hmm.
And so with this line, that means at some point it's going to be more valuable than gold, right? But at this point, because we're trying to figure out where this next cluster is going to be, we have to get the two numbers, right? The 12.798 and the 4.11 through this line, this regression, right? So once we get those two numbers, we have $5.5 trillion, which equates to $288,000 Bitcoin.
Yeah.
That's the projection for this cycle.
Mm-hmm.
And $288,000 is nothing compared to what it will be after the next halving, right? And then the projection is going to be like, I don't know, $1.5 million or something crazy like that.
Oh my god, it is, dude. And that's when the world ends, basically.
So so we
That's
did
when
the
everything
math. We did
changes.
the math. The next cycle, the next halving, the stock to flow is going to be worth the stock to flow ratio will be around 106. So let me go back. What is 106 compared to gold? Gold is 62, almost double.
Mm-hmm.
So theoretically, with the math,
Bitcoin
Bitcoin
double,
valuation will be
yeah,
double that of gold.
at least from a perceptive value.
Yeah,
Like it's going to be twice as difficult to obtain. You
that's
know,
right.
therefore, in order for these miners to maintain like that difficulty, right? Like the valuation has to compensate for that.
Yeah.
It's kind of like the economics of Bitcoin, right? Like the valuation of the asset itself has to be worth it for all these miners to actually put in that kind of work.
Yeah.
You know,
And so if you're watching this right now, remember the stock to flow ratio is less than gold right now. Once it
mm-hmm.
goes past gold, this is going to be an asset unlike anything we've ever seen before.
Mm-hmm.
And so that's why there's a lot of confidence from Michael Saylor from MicroStrategy that this is going to be, bigger than the internet, right? Because of these models. And you better bet that these huge institutions and the banks and governments, they know
Yeah,
that
just,
this exists. They're doing the exact same math because that's
yeah,
how they value gold, and they're getting the exact same numbers.
yeah. And
And
and the people who possess like the largest share of these bitcoins, they're the ones who are going to make the decision at the end of the day
yeah,
when this market is overvalued. And because they all have this same stem of information, similar to how technical analysis for some reason always ends up working,
yeah, for
because
sure.
it's like a mass collection of thought. Like everybody's staring at the same charts, so therefore we kind of all react in unison.
Yeah.
you know, to
Yeah.
these resistance and support levels. So whales have their own analysis. They don't call it technical, I bet. It's like
It's like
well
well
analysis.
analysis. Yeah.
So exactly, this is part of like an inside peek of the well analysis. And
Yeah.
they probably spend a shit ton of money to come up with this analysis.
Yeah, for sure. And so there's a caveat to this, right? Just because the prediction is $288,000 does not mean that we're going to see a $288,000 in this cycle. It could mean that it goes to 200K and then it dumps from there just because the mass psychology says, yeah, 200K is like really high Bitcoin, so I'm just going to dump. And the whole world follows. And then we have 2 to 3 years of bear, just like we experienced from 2017. And then from its bear, it's going to go back and the halving will happen again. It's going to be clear almost double that of gold. And then all of a sudden you're going to see a $400,000 Bitcoin and then $1 million and then 1.5 million, right, in the next cycle.
Mm-hmm.
So all that to say is don't necessarily wait for a $288,000 because it might not even get there. And then second, it might even just surpass 288 and go like the 350,000. But what Iman was saying is like whales are the ones who drive the market. If they decide to dump at 350K, that's when it starts to dump.
Yeah.
If they decide to do it at 200 or 180 or whatever that number is, that's when it dumps. Just remember, we don't know where these dots are going to start congregating on, right? We don't know if it's all the dots are going to be below or all the dots are going to be high. Like we don't know. So, but we have sort of a good solid mathematical proof that there's a chance that we can see a $288,000 Bitcoin
within this happening.
Within this cycle that we're experiencing right now.
2024. So we're already almost like to that halfway point. So
yeah,
let's bank on it essentially.
Yeah. So is that explanation enough to like convince you, Iman?
I'm still not buying any Bitcoins, dude. Like, I mean, I probably should. I mean, yeah, overall, the strategy is to acquire what will in the future be perceived as the most valuable asset on earth, right? Like, for sure, that should be all of our goals. Just like it was everyone's goal to acquire as much gold as you could, you know, in the 1800s or whatever the fuck.
Yeah.
Actually, throughout all of history, you know, who wouldn't want to own that? And everybody did. Therefore, like, you know, civilizations were formed off of the backbone of that belief. So yeah, dude, I get it. It's just, man, I have way more fun flipping shit coins. You know what I
mean? Yeah. This is not to say that you can't make more money on shit coins. This is more of like, you know, we need to establish a strategy. Remember when we were growing up and you know, we'd go to high school and they say, hey, you need to figure out how to invest in the stock market and make sure that you're doing your right investments so that you can retire when you're 65 and all that stuff. This is a new model, a new strategy for the millennials and going forward of like instead of a 401k, like it's more of like how much money are you putting into Bitcoin? That's going to be the new question.
I think already.
It already is. Yeah, exactly.
Yeah. How many Bitcoins you got? That's the new flex.
Yeah. You know? So that's the video for today. Hopefully you guys learned something new. Let me know what you think. Comment in the section box below. Let me know, you know, do you believe in the stock to flow or stock to flow cross model? Is this bullshit? Thank you. Yeah, Hopium.
Point. Yeah.
Yeah, I want to thank Plan B. This guy's a baller. This guy knows what he's talking about. And make sure you follow us on Twitter @TheBlockRunner. Like, subscribe. We'll catch you in the next video.
Peace.